Hello, this is Caroline Bell of Summerhill Financial Services, just with the last update for this year. As we all know, it's been a pretty volatile time in markets, so everything that goes down goes up and down again and then up again. And this is evidenced with the Australian share markets going up 2.5% on Friday. One of the questions that's come up this recently, and we're seeing it a lot in the media in relation to US share market versus the Australian share market. The Australian share market's had a couple of depressing factors, particularly given our Australian share market is heavily influenced by banks and resources stocks. As we all know, prices have come down for resources stocks in terms of commodity prices. But what's not necessarily understood is that our banks are having to go through potentially some new capital liquidity requirements in terms of they need more capital behind them. Now this has had a negative impact on their share price. It has nothing to do with the profits they're making, and in fact the current Australian bank share dividend is well in excess of 6% with franking credits, so very, very attractive at the moment. The thing to note as well, which isn't necessarily reported on in the media, is with the US share market, earnings drive share prices, and at the moment the US has record profit margins in excess of 10%. Now, the average profit margin for US companies is around 6%. Even if we see those profit margins drop to 9%, which is still ahead of the long-term average of 6%, that's going to bring back a share price. It's going to drop share prices. So it's just something to be cognizant of, that when we're looking at share markets, it's very much looking forward and what's been driving sort of the growth or the underperformance, not just looking at what the past performance is. Other things for this year is compliance has been a big issue for many financial advisors. The most interesting one that's come up is some compliance issues or compliance requirements that came up July earlier this year. And it looked like they were going to be repealed, and now they're back again. Now, this doesn't impact Summerhill Financial Services in any way. We were doing all the compliance requirements anyway that were being legislated. The only difference is just tightening up some of the wording a little bit in relation to our annual review of your service and your fee. As you know, that your service level and your fee gets reviewed every 12 months. I'm just going to be in the review email that you get sent. It'll just be referring to terminating the service and then reviewing again. That's really the only change that's going to impact you. But really it's more of a case of wording as opposed to any potential change. One of the other compliance requirements that we've had to go through this year is I've registered as a tax financial advisor with the Tax Practitioners Board. This actually has no impact on the advice that is being given to you. All it means is that I can now continue providing the tax financial advice that I always have done. Anyone that hadn't registered by a particular date is no longer able to provide advice on the tax implications of any financial strategy. And lastly, we've just updated our personal balance sheet for you just recently towards the end of the year. A couple of you may have seen it already, but it's something we'll certainly be rolling out in 2015, just to give you a better feel for where you've come from and where you are now on a line-by-line basis with regard to cash, superannuation, debt, what have you. As always, interested in your feedback on the new personal balance sheet when you get a chance to have a look at it. Wishing you all the very best for 2015. A very happy Christmas. I hope everyone gets a chance to have a break and relax. And thank you for your support during 2014. Happy Christmas. Bye-bye.